So this is a continuation of my previous video where I was backtesting on gold. So now I'll be continuing with my backtesting. So as we previously made analysis here, we got this particular entry, price pushed to the lower side. And now when you check on the daily time frame, we are now bearish. The price is now moving to the downside. We've had a break of structure, multiple break of structures. Okay, so now all we need price now to do is to give us a retracement, and then from there we can now continue with the downtrend move. Okay, so now for us to now get that retracement level, we now have to plot our key levels. So now we identify our key levels where price is likely to reverse from. Let us push this one to the side. So let's find our key levels. We can use start from the daily time frame. So on the daily time frame, I can see that we have let me show you. We have this particular zone here. That is on the daily time frame. You can see that this was previously support, and then the support was broken, and price now we need price to come and retest this particular zone. And if we use our Fibonacci, we have now to use the Fibonacci to see if that particular point is above premium, because we don't want to trade anything below premium level. So now we use Fibonacci to see if that particular area is on a premium level. Let me move this one to the side. So yes, you can now see that that particular area is exactly at the 50% Fibonacci retracement zone. So it is right there. So let's just remove the Fibonacci. And now let's proceed to the 4-hour time frame. Let us see if we can get a key level on this particular 4-hour time frame. So this is the level that we've drawn from the daily. Let's change the color. Let's make it red to avoid confusion. So you can see that particular zone is right there. And if we can get a refinement, yes, it's perfect like that. You can see it was previously support, pushed price to the upside, and now price broke below that particular zone. And even on this particular drop, you can see that price gave us a pullback into the zone and continued the downward move. So now all we want price now to do, since we have this key level here, and now on our 4-hour time frame, we have this particular key level on the 4-hour time frame. Let me zoom in on price and I show you just what I mean. So on the 4-hour, let me change the color of that line that I've drawn. Let me make it yellow. No, that one is already yellow. Let me just use it as black. So if I move that to the side, you will notice that on this particular level here, we do have a breakout. Okay, so this is a key level. Okay, I'm sure this is an order block on a lower time frame like the 1 hour. So I'll be moving back to the 1 hour. So I move back to the 1 hour. Let's see what is that particular zone. Okay, is it an order block? Okay, you have to build a story around the market and see if yes, so that particular zone that we have identified on our 4-hour level, it is a very good order block on the 1 hour. When we refine that level And remember not to refine so much, because at times you might miss on a trade just because you made your refinement too low on a lower time frame. Okay, so this is our order block on the 1 hour. It coincides with our 4-hour key level, and now that makes this particular zone a very strong level. And also we do have liquidity resting below this particular area. That's our liquidity. We can annotate that as X. Okay, that is liquidity relaxing, and we wait for that particular liquidity to be taken so that we can get a push to the downside. Okay, you can see right here we had this breakout. So all we anticipate price now to do from this current pullback, let's check the 1 hour, the 4 hour I mean. So now on the 4 hour time frame, since we have refined that particular supply area on the 1 hour, and now we have our liquidity plotted out, so all we want price now to do is maybe give us a breakout. So now that we have identified this 1 hour supply, and also we plotted our liquidity, the reason why we are using that as our liquidity is that this is a zone that is also a key level, and most traders are likely to use this particular level for their entries, even though we will check how price reacts on that particular level. So we will just have that extreme POI, okay? Extreme order block, okay? Since we got the two zones, they all are valid. They are all valid. You can see even this key level right here is very valid. So I've chosen the extreme zone. Okay, so we will see how price will react on that extreme zone, and then whether we are going to get sales from that particular level. Yes, with that said, now all I want price now to do, all I'm anticipating for price now to do is either we get a break of this low. That is my anticipation, or we get a break of this high. So that is our trading range as of this particular area. So now that we have identified our trading zone, so now we wait and see what price is likely to do next. And if we get a breakout of that high, if we get a breakout of this high, then price should pull back into a key level and then proceed to mitigate that particular level. And then from there, now we can get a confirmation. If we get a confirmation like that, change of character, and then a pullback into the zone, then we will be anticipating to come and take this sell side liquidity. Okay, so that is my anticipation. If by any chance price breaks above that zone, we get that pullback, take profit above there, and then once price reaches our 4-hour supply, and then we can now take our sales. Okay, but in the scenario that we don't get a break of that high, if price now decides to take our lows right here, okay, if this price comes, takes out this low, then we will need price to pull back into premium, and then we continue to the downside. Okay, so those are the two only possible outcomes of this particular price at this particular zone. So let us play price, and now we get to know where price might proceed next. Okay, so we are on the 1 hour. Let's play price, and we get to get that break. Yes, price is still ranging. You can see that our zones are still being respected. Yes, so now we get a break to the high, and now that is a breakout of that particular level. Now when we go back to the 4-hour time frame, you can now identify key levels using this 4-hour time frame. And now let us zoom in. So if you now zoom in on these 4-hour candles, we now have this key level right here. So that is our key level. Let us refine it down to the 1 hour. And like I said, now you come to 1 hour. This is an order block on the 1 hour. That is an order block on the 1 hour time frame. And right here, we get to plot that order block. Let us not extend this one. Let us just draw it. That way we can now see how price reacts on that particular zone, even though it has been mitigated previously. So now we can even use the next candle. In this scenario, it has been mitigated, even though you can see we have this particular zone here. So that is the right one. The next candle. When the order block has been mitigated, you always take the next candle that is associated with the fair value gap. Okay, so now we have our key level. We have fair value gap. That is our FVG right there. We can change the color of that. That is our fair value gap. So that one being our fair value gap, we have our zone. So now all price has to do at this particular zone is now we anticipate price to give us a push to the downside, fill that fair value gap, and then react from our zone and give us a change of character right there, and then push to the 4-hour supply that we drew earlier. Okay, so on the 4-hour, let us push. This is our 4-hour zone. So price should come, tap on that supply, and then proceed lower. And our first TP in this scenario, we are going to use this liquidity. We are going to target this previous high. That will be our TP1. TP1. In case that trade is triggered, that will be our TP1. Okay. So now we have our TP1, and the final take profit is going to be on that supply. That is our final zone where price is likely to react from. Okay. So now when we go back on the 1 hour, so for an aggressive trader, whereby you don't need confirmation for an entry, once you get that break, you have plotted your zone, you can now go ahead, take your long position, and just position yourself here. Place your limit, stops below that swing low, and then you target that particular high. You can see it's a good 1:3 risk reward ratio at 3.65. But if you refine your stop loss, it now even becomes a 1:5. Okay, but it's not so safe to place your stop loss so close to that order block. You just give it some room to breathe. So that is a possible outcome. So now we leave that position right there. If price is able to trigger that, we are going to be in the trade. And also, if price now reacts to this particular zone, we are going to move to the lower time frame and see what price is actually doing at that particular point in time. Okay, so now I'll refresh. Let us remove these drawings. All right, so now we have our fair value gap. We have our order block, and now we are anticipating for price just to come, respect that order block, give us a character change, and then we push to the 4-hour supply. Remember, we are overall bearish, okay? On the daily, you can see we are overall trend, the overall trend is bearish. This current move that we are anticipating to take, this is just a pullback, okay? So at times you can go and get a counter trade against the trend, okay? So now we are currently trading against the trend in order for us to get into a key level and then align our positions with the higher time frame trend, okay? With that said, now let's play price and see where price is likely to react. So now you can see we are getting a push to the lower side. Yes, we're getting a reaction to the lower side. So now we are at a key level. That is our fair value gap has been filled. On that fair value gap being filled, now we wait and anticipate for price now to come take this order block and then maybe push to the upside. And since now we are very close to that order block, I'll move to now 5 minutes. Okay. So on the 5 minutes, all I want now to see is for price now to come into this key level. Price to do that, come into this key level. Now just a moment. We anticipate now for price to come into our key level, give us a change of character like that, give us that pull, and then we push to the upside, okay? That is the setup now we want to see on this time frame. So we are on the 5 minutes. And when we play price, all right, okay, so price has come into our zone. Perfect. So let us get rid of that. So now that price is in our zone. Now we plot price. We follow price closely. So if we get a close above this, then we make our entry. Let us reduce the speed of that. Let us use that. Okay. If we get a close above, all right, not yet. We haven't had a close. That spike just spiked above and closed below the zone. But now we want to see a close, okay? And yes, we get a close. We get a close, and since now we've gotten a close above that zone, we are going to take our entry. If you zoom in on price, if I show you this zone, price now broke above that zone, and on the close of this particular candle here, we take direct entry. This candle triggers our trade, and now it is only right for our stop loss to be below this zone. You can see now the stop loss is very small when you refine your zone down to the 5 minutes. And now remember our take profit, as I mentioned, we are going to target the 4-hour. We are going to target the 4-hour liquidity, okay? 4-hour supply, all right? So now that we've entered at this particular zone, I'm going to target the 4-hour. I'm going to target the 4-hour buy side liquidity, okay? Let us target the 4-hour. Just a moment. You have to build a story around your trades, guys. You can see how I'm trading with valid reasons, and when you do that, you only get reasonable trades, one that you can build a story around them and make your profits. So now that price has given us a change of character on the 5 minutes, and now even on the 1 hour, you can see that's a break on the 1 hour. We can now proceed to make our entry targeting that high. And now for those who place their trades directly on a pending level like that, you can see this one is a 1:3.87, while this refined entry is a 1:7.93, almost a 1:8 risk reward ratio, okay? So we are only risking less on this particular trade while this other trader was risking a lot because he had to cover this particular low. Okay, that is the importance of refining your zones. Once price reaches your zone, you always move to the lower time frame, get a refined entry, and now your stop loss will be very small. So now price has to go upside. Okay, remember you could take partials on the previous high. Okay, so when price reaches this particular level, as I've noted like that, this will be your TP1, whereby you will be closing the 50% of your trades and then leaving the rest of the 50% to proceed to your final take profit. Okay, with that said, now I'd like to play price, and we get to now get the actual move. Okay, so that is the price. All right, so price is moving and we are in the trade, guys. So now you just have to be patient. You let price play out. You have done your analysis. Your trade is perfect. You refined your entry, and now you can just wait and let the price do its part. Okay, that is the goodness of higher time frame combination with the lower time frame. You get precise entries, make your trades perfectly, whereby your risk becomes small and your take profit becomes massive. Okay, so price is still moving to the upside, and we haven't made a break of this high yet. All right, so price is moving, and right there we get a break of that high. So we've made a break of this internal high. Okay, so now if you are a high risk trader, you can now even go ahead, make another entry once price confirms a breakout of this high. Okay, but then since price is so close to your supply area, at times some trades you don't need to take each and every entry. Okay, when the risk reward ratio is not promising enough, you just leave the trade to run. Okay, like you can now, yes, price is now moving to our side. It is very easy. We got a sniper entry. Price is now moving into our key level. Right there, TP1 has been hit. So for our profits, now we go ahead, close the 50% of the trade. Okay, let's say you are risking $100 in this trade. So now you go ahead and close half of that position and let the rest to move, okay, to your final take profit. All right. Trading is easy, guys. You just have to keep things simple and wait for price to play out, and you could just be into profits. So I see another possible way to make an entry. So let's go back to the 4 hour. I want to show you how you could make another re-entry. Now right here, you could make another re-entry because we have this key level. So price has broken that high. You can now see that that is our breakout on the 4-hour time frame. We got a close above that zone. So now after that close of candle above that 4-hour high, now we come back to the 4-hour. Where are our key levels? So we have this particular area here. We have that key level. And we also have this other key level down here. So now we have those two areas where price could actually react from and give us an entry. And when I refine the levels back to the 1 hour, let's check on the 1 hour. The 1 hour time frame, you can see that that 4-hour key level is a clean order block on the 1 hour. That's why I always say, guys, when you refine your levels, always use multi-time frame, whereby if you're using a 4-hour key level, move down to a lower time frame, which in this case I like using the 1 hour. Okay, So after you've made that refinement down to the 1 hour, so that is an order block on the 1 hour, and this other key level is still also valid. You can also notice that this is a good area to take buys from and then use this particular level as liquidity. So since price has tapped into this key level, now we move back to the 5 minutes for entries. Okay, so now on the 5 minutes, when we zoom in on price on the 5 minutes, now we wait for price to give us a reason for us to take a buy position, and right here we get this breakout. So after the breakout, what do you do next? You plot your key level, and in this case our key level is right here, this particular order block, 5 minutes order block. Okay, that is our key level. Can even use it like that and plot it out like that. So now we have a 5 minutes key level inside the 1 hour and the 4 hour key level. Okay, now we wait on price to give us an entry. We can even go ahead, make a limit order. Okay, we still have 2 trades running. We still have 2 positions, and with those 2 positions, we are now anticipating for now price to give us a re-entry on this particular zone. So we're going to take our position right on that 5 minutes order block. Then our stop loss, just to be safe, we're going to use this swing low as our stop loss. And now we're going to target our previous buy side liquidity. Okay, so when we target that, we're going to see that our risk reward ratio in this particular position is a 1:4.5, a 4.6, which is still not bad. Okay, that is a trade that I would be happy to take any day, anytime. It's a clean entry. The story built behind it is very much valid, and we are targeting the buy side liquidity. Okay, so if I play that particular price, now we wait. Okay, so price has pushed down to the lower weight. Now when I go back to the 30 minutes, we notice that despite this 5 minutes key level, which is our order block on the 5 minutes, we notice we have this key level also on the 30 minutes, since price pushed higher and gave us this particular order block. Okay, so now price broke past this high. This is the high I'm talking about. Price has broken past that high and now given us another order block, another key level here on the 30 minutes. Okay, so now that we do have 2 key levels coinciding with each other, so now in this particular position, you can go ahead, take another limit, and now you will be having 2 possible outcomes. Okay, so now your stop loss is going to be below this particular 5 minute low. Now you don't have to put this stop loss way much lower. Okay, you don't need to do that. You just put your stop loss below that area. And now our final TP, which is the 4 hour liquidity buy side. Okay, so now we proceed to take our, wait a minute, I've messed up. So on that entry, let's take this back. It was right there. So on this entry, we now target the buy side liquidity. Okay, this one is the buy side liquidity. I hope you're with me and that you're not lost anywhere. We are just building a storyline around this market. Okay, we are bearish and now price is just pulling back. Remember, every time we get a push, we get retracement. Okay, price has to always balance itself. Every time we get a massive drop, price pulls back into the premium level, and then from the premium level, now is when you can take your continuation of the trade. And if it is vice versa, when it is an uptrend, you wait for price to balance itself on the discounted level, and then you take your entries, continuing with it with that particular trend. So now in this case, all we are doing right now, we are on a pull phase back into our premium level so that we may continue our sell positions. Okay, so do not be confused by these particular trades that we are taking right here. We are just building a storyline, okay, whereby you can now see that price gave us a pullback here. We got this break. Okay, so on that break, we got a retest on our order block right there. We made our entries. We refined this particular entry level down to the 5 minutes. We got triggered into that trade, made our TP1, this liquidity right here. TP was hit successfully. We closed 50% of our position. And now currently all we are doing in this particular level, we are looking for more entries so that price continues to hit the 4-hour liquidity or the supply that is currently on the higher time frame, which in this case we are using the 4-hour time frame. And now when price reaches that particular supply on our zone, okay, when price now gets to this key level, we will be anticipating for more possible sales, and then those sales we will be targeting our external low. Okay, so now that is where advanced price action works magic for you guys. Okay, once you are able to identify your internal structure, also you are able now to identify your external structure. I promise you that trading becomes way too easy once you are able to spot those two differences. Okay, so all you do, always ensure that whenever you play trading the internal structure, do not forget about the external price action. Okay, always have those zones where price has to take out and respect in order for you to take your entries. Okay, before taking any positions in your trading, ensure that you have done a top-down analysis, and that whenever you're trading against the higher time frame, you only risk small amount of your capital. Okay, but now when you're trading that the higher time frame is in line with your lower time frame, whereby the 1 hour is bearish, the 4 hour is bearish, the daily time frame is also bearish. Like in this case, if price reaches this particular key level and the 1 hour aligns with the 30 minutes down to the 50 minutes and the 5 minutes, this is going to be a very good entry. And if at all that price is going to react from that key level, then you can see that we are going to be targeting external lows. And this is going to be a really massive trade. Okay. With that said, now let's play price and get to see how price is reacting from that key level that we have just drawn. Okay, let me take out this. You just have to build a storyline around your trade entries. So now we are going to play price and wait and see how it goes. So price is moving. Price is still bullish. It hasn't given us any reason to doubt. So we are in profits. Remember, we are now having how many positions open? We have this trade is still open. We have this other one is still open, and we've closed partial profits. And right there, we have been triggered into these two trades, you see. So now we just let price to play out, okay? We have been triggered here. The trades are now very active. This candle here tapped us in, and immediately on that tap, you can go ahead and now use this one as your exit. Okay, you can now close partials above this high. I always say, I will repeat this. When you are in a trade, you hit a 1:3, 1:4. It is always advisable that once you target the previous high, you close your partials, because you never know what price might do. Price might at times just take the previous high and then reverse against you. So in this particular trade, we are going to close some partials, okay? We're going to take 50% of our risk and close that 50%, let the rest to run, okay? So do proper risk management. With proper risk management, you will always be making profits. In that, in case this particular trend reverses on us, we will still have made some money, because we shall have closed half of our positions, okay? Unlike a scenario whereby you are targeting this high, price came so close, as you now notice here, price has come so close, missed our exit with just a few pips, okay? So now in that particular scenario, you always be safe, because you already took your partials, made your profits, because this one was a very big move, and this one could have made you lots of money. So you close 50% of your profits, and then you move your stop loss to break even, okay? That way, even if price comes back into your entry, it will only hit your break even position, and you will not be in a loss. Shall have made your profits and exited that market with profits. So now when we play price and we get to know where price is headed to next, the trades are still open. Remember, we've just taken our partials. Okay, do not forget that. We still have open positions. And now we just let the trades to play out. Okay. So now we've gotten a break of that high. In most cases, once you get every break of that high, you just continue to spot your key level. And now right here, I can identify this as a key level. This is a valid key level. We have even a fair value gap, and you have that support which was broken. Now resistance, I mean, this particular resistance was broken, and now it will act as our support. If price comes into this particular zone, we move back to the 5 minutes. So all I want price now to do on that particular level, all I need price now to do on this level, if at all price comes into this zone, this one, this demand, I want to see a change of character, and then we continue to target the buy side liquidity, okay? That is my anticipation. But if we get a break below this zone, then I'll be taking sells, okay? It is that simple. You only react to what the market is doing. Never ever force the market to do what you want, okay? Don't force the market to sell, or because you want to sell at that particular moment. You just react to what the market is doing. So in this particular trade, now we move back to the 5 minutes. On the 5 minutes time frame, this is where now we will be making those sniper entries. So now when we play price on the 5 minutes, on the 5 minutes time frame, let's see how price is reacting to that area, okay? So price has come into our zone. Still, it hasn't mitigated that zone. Not yet. Still, price hasn't touched our zone. Let us slow down price. So our zone is still fresh, hasn't been mitigated. Let us extend it. You can see how much I'm analyzing this thing step by step, building a story around my trades, and just like that, I'm getting clean entries, okay? So now I play price. Let us see if we get a tap onto that zone. Price hasn't touched our zone. Can now notice that it is on a range. Price is just moving sideways. Still, it hasn't mitigated our zone. is on a range, hasn't come down into this level yet. So now price, you can notice, if you notice this one, this was a break of a low. Price pushed below, never made past this low, and now currently price has pushed to grab liquidity from this level. But since it hasn't touched our zone, we won't be taking any trades. Remember to always let the market come to you. You never chase price. Because tell me why I should enter at this level. I cannot take an entry from this high. That price has already gone too high, and I only want it to come back into this particular zone. Since these are equal lows, there's also high risk that price could just come, take these lows, and push to the upside. That's why this trade, even though it looks so valid, you've gotten a break right here. Looks so nice to take a buy from here. Market will always trap you, okay? It's a clean trade, but since liquidity hasn't been grabbed, I choose to be out of that trade. I don't want to take that position yet, okay? If it decide to go up without me, well and good. As a trader, you learn to be patient and only trade according to your trading plan and trading rules, okay? So this particular trade, you can see it could have been a good trade, but no worries. We are still in profits in those other positions that we made, okay? We have active trades. We have these 2 entries. Actually, there are even 3. There are 3 entries. Yes, so price is still moving. We want a break of this low. If at all we get a sweep of that low, it will be very good and valid entry. So price is moving. Let us speed that price. Let us speed that price. So we still haven't gotten that push of that low. Just a moment. I'm having issues with my internet. So by now, I believe you can be able to build a storyline around the market. I believe by now you can be able to determine internal structure and differentiate what an internal structure is and what an external structure is. Okay. Using the higher time frame, you always find your external market structure, and then the smaller time frame will always give you those small pullbacks inside the overall trend of the market. So I don't know why price is not moving. So when we move back to the 4 hour, so today we have really made good trades. We haven't taken any loss. We built our storyline, a very much clean storyline, and now we managed to take several trades. As you can now notice, we took a 1, 2, 3, 4. We took 4 winning trades, okay? 4 winning trades, and all the risk reward ratio are good, and the sniper entries, okay? So you only have to build that storyline. Yes, so now since the video has gone too far, the video has been too long, it seems like I will be making part 3 of this particular video, okay? seems like I will be making a part 3 of this video. So in this episode today, we made 1, 2, 3, 4 trades. All were wins. So adding the 4 to the last 8 that we made, so that becomes 12 entries. And among those 12 entries, we only made 3 losses. So that is, we won 9 good trades. Okay. So we have been profitable overall. Okay. So you can see that with this particular strategy, with advanced action, price action, if you do it right, like the way I've been doing it, and you follow your rules, you set proper risk management, you only risk what you are able to lose, then I guarantee you, you will be making massive profits. Okay. So now, since the video is too long, I will end my video there. We will see what price has to do if it reacts from this level or if it continues to break towards the downside. Okay. So today we've only traded on the pullback into the premium level. Okay. Always remember to balance trades. Okay. When a market pushes to the downside, makes those breaks of lows, you notice that price always pulls back, gives us a mitigation into the premium level before proceeding downward. The same applies if the market is bullish. Price always balances itself, comes back to discounted level, and then continues to the upside. Okay. You can always use your Fibonacci levels to determine the premium and the discount level. Okay. Yes, trading is easy, as I always keep saying. Keep your trades simple. Build a storyline around your entries. And if you do that, I promise you, you will be making profits. Okay. So now that the video is long, allow me to end right there. We will be continuing from this point in our next video. See you in my next video.